Sego Sawakwego. Good evening, everyone. Thank you for joining us at the council meeting tonight on Tuesday, August the 20th at 7 p.m. And we are here to go over the March 31st, 2023 annual audit report. And we welcome John Tour from Wilkinson Company Chartered Accountants tonight to our meeting. He's here to present the audit report to the council and community. And we have Cecil Capidia, the Director of Finance from Mohawks Bay of Quinte. We have Sherry Miracle, who's the Chief Administrative Officer. We have Angela Miracle, the Director of Operations. We have Councillor Curtis Brandt here with us. Do you want to wave, Curtis? We have Councillor Aaron Ferranti here with us. I'm Chief Don Miracle. We have Councillor Chris Miracle here. We have Councillor Linda Lewin here. And the Secretary to Council, Shelley Bowden, has just stepped out for a few minutes, but she'll be joining us. So welcome to the council meeting. And we will now have John take it over and along with Cecil, present the audit as at March 31st, 2023.
Good evening, everyone. Thank you, Chief. So just starting first with our independent auditor's report. So it is our opinion that these financial statements present fairly in all material respects the financial position of the band at March 31st, 2023, and its results of operations, changes in net assets and cash flows for the year then ended in accordance with Canadian public sector accounting standards. So that means it is a clean audit report. Ultimately, we conduct our audit in accordance with Canadian generally accepted auditing standards. It is the responsibility of management and those charged with governance, i.e., band counsel, for the preparation of the financial statements. As auditors, we identify the risks of material misstatement, whether due to fraud or error. We obtain an understanding of internal control relevant to the audit in order to design appropriate audit procedures. We evaluate the appropriateness of accounting policies. We conclude on the appropriateness of management's use of going concern basis accounting, and we evaluate the overall presentation, structure, and content of the consolidated financial statements.
Okay, John, we have just an announcement. Councillor Ogwari Brandt is joining us by Teams. So Councillor Ogwari Brandt is joining us by Teams tonight.
Somebody join.
I saw his name up there.
Okay.
But I will continue on with the statement of financial position.
It's not.
So when we look at the consolidated statement of financial position, at March 31st, 2023, there is cash of just over 88 million compared to 53 million in the previous year. There is marketable securities of just over 32 million compared to 23 million in the previous year. Accounts receivable of just over 25 million compared to 27 million in the previous year. Amounts that have been advanced to the Belleville Affordable Housing Limited Partnership of 970,000. Due from Loyalist Solar LP of just over 38,000. Investment in Loyalist Solar LP, just over 10 million, which is fairly comparable to the previous year. There is an investment in Ernesttown Wind Park of 3.6 million, which is the same as the previous year. An investment in Belleville Affordable Housing LP of 185,000. Funds held in trust with Indigenous Services Canada of just over 609,000 compared to 591,000 in the previous year. And property held in trust relating to the Culbertson Tract settlement of just over 5.2 million. When we look at the liabilities, we see Community Development Fund under administration of just over 3.4 million compared to 3.2 in the previous year. Funds held in trust relating to the Culbertson Tract settlement, so just under 33 million, which was received in the current year. Normal accounts payable and accrued liabilities of just over 14 million. Security deposits and prepaids, which would be relating to any rent deposits that renters have made of just over 194,000. Deferred revenue of just under 50 million compared to just under 44 million in the previous year, which relates to funds received for projects which haven't been expended yet. Mortgage down payments of just over 25 million. Loans payable relating under capital fund and operations of just over 10 million compared to 12.5 in the previous year. And then loans payable for both the AOT solar and the AOT wind of 13.8 million and 5.8 million respectively, up from 13.3 and 5.5 in the previous year. When we look at non-financial assets, so these are assets that really can't be expended as they are basically tied into your capital projects, is tangible capital assets, which really are your sort of property, vehicles, land, buildings, of just under 150 million compared to 124 million in the previous year, and any prepaid expenses and inventories of 188,000 compared to 103,000 in the previous year. Ultimately, when we look at the accumulated surplus of the band, we see that the band has an accumulated surplus of 186 million compared to a surplus of just over 154 million in the previous year. However, as previous noted, the majority of that really is tied in with your tangible capital assets.
Okay. Question, John. The Culverson land settlement, $32.9 million is a liability. Why is it not like reflected up in financial assets as well? Because there is a bank account with that money in it.
So there, under your cash, chief, there'd be a portion of that, along with the property held in trust, those two components,
So
both
that
under the cash as well as that property.
so that's part of the 88 million then.
Correct.
Okay, that explains it. It might be good if we could show that separately, because of course we approve these financial statements. We can't change it now, but that separately, so people don't ask that question.
Yeah, and that would be outlined as you'll see within the notes to the financial statements. Later on, you'll see that in the notes, chief.
Okay, thank you.
So next, when we look at the consolidated statement of operations, under revenues, so again, when I talk about revenues, it is not necessarily funds received from the different funders, but it's really tied in with funds expended. Because as an example, you may have received 30 million from Indigenous Services Canada, but if 6 million of that wasn't expended on a project yet, and that project is to be finished in the next year, it wouldn't be recognized necessarily into revenue. So when we look at funding recognized in the current year, 24 million compared to just over 30 million from Indigenous Services Canada. When we look at health and welfare, 3.5 million compared to 3.5 million in the previous year. Under CMHC, just under 5.2 million compared to 346,000 in the previous year. So when you see a large jump like this, a lot of times it does relate to a capital project where you have received funding from that organization. Then we see other contributions from federal government, just over 14 million compared to 3 million in the previous year. When we look at contributions from province of Ontario, just over 6 million compared to 7.9 million in the previous year. And when we look at other major line items, we see that program user fees, sales and other are approximately 6.8 million compared to 4.3 million in the previous year. When we look at interest revenue, we see that at 3.9 million compared to 1.3. So as the band has accumulated funds and as interest rates have increased, we see that corresponding impact on the bottom line with respect to your interest revenue from the previous year. When we look at OFNLP statement amounts, we see that's just over 5 million compared to 3.3 million. So that concludes not only funds from sort of the OFNLP agreement, but also interest and other investment income earned on those funds.
And there are settlements in there, I think, aren't there? The one-time settlements through open LP litigation.
And then when we look at the other line items, we see funds received relating to Yaoti Wind and Yaoti LS Solar, as well as the Mohawk Golf Course Limited Partnership. And as these are consolidated statements, while those are separate legal entities, as these are consolidated statements, where they might be 100% owned by the band and or where it's 50% owned, we consolidate the band's portion into these financial statements.
So the $1 million is used to pay the bank loans. Is that correct, Cecil?
This is the revenue which is in the Mohawk Golf Course Limited Partnership, and it's a separate revenue that the golf course has actually earned during the year in that fiscal year.
I know it's revenue during that fiscal year, but that money is used to pay those bank loans.
Yes, which is kind
And
of.
there's a sufficient revenue coming from the golf course to pay the bank loans.
Yes, monthly we send the invoice.
So it doesn't have to be topped up, it's not topped up from any other band funds.
No.
Okay, good.
So when we look at the expenses, we see band operations at just over 31 million in the current year compared to just under 28 million in the previous year. We see housing projects at 2.3 million compared to 1.5 in the previous year. Other major line items, we see OFNLP expenditures at just over 2 million compared to 3.2 million in the previous year. Amortization of your tangible capital assets of 4.6 million compared to 4.1 in the previous year. And then expenditures under Yaoti Wind and Yaoti Solar, which primarily relate to interest expenditures on loans relating to these projects. And then we look at the expenditures. So these are the actual expenditures of the Mohawk Golf Course Limited Partnership at 841,000 compared to just under 800,000 in the previous year, to ultimately get to an annual surplus of just over 31 million compared to 19 million in the previous year. But again, when we see that surplus, much of that is reinvested back in the tangible capital assets.
So with the Yaoti Solar and the Yaoti Wind, these are the amounts that have been paid by the company to retire those loans. Is that correct? And so then the other part on the revenue side on the balance sheet, that's the excess revenue that comes to the band once those loans are paid. Is that?
You will see both
Okay.
the proportional income earned as from those partnerships, as well as primarily the interest expense on.
So
those.
Yaoti Wind has to give us $50,000 a year, and then they pay the loans, right?
Yeah, we get a participation payment as well, and there's another amount that we get which is kind of covered towards the main loan. Yeah.
And Yaoti Solar, they transferred 13 million for the solar. Is that the total amount, or does that include the loan?
In the balance sheet is the total loan amount, Chief, and this is the monthly the P&L side of the.
So that's what they transfer to us after they pay those loans. It was 13
And
million.
where the loan stands, it's in the balance sheet.
Okay, that's what I thought.
So when we look at the consolidated statement of change in net assets, the annual surplus again is 31 million, of which 30 million of that is used to acquire tangible capital assets. Your amortization is just over 4.6. So ultimately, when we look at your net assets in the current year, the increase, which for lack of a better term is your more liquid assets, is just under 5.8 million, the increase in the previous year.
Okay, did we not have any money from Infrastructure Canada for the Disaster Mitigation Adaptation Fund for the $30 million waterline project?
Yeah, we have that, and that's what the other federal, if you look at the other contribution from federal government, the $14 million, that's where the DMAP project.
Oh, so that includes, that's
Yes.
other contribution, that includes
Yes.
Infrastructure Canada,
Yes.
DMAP, okay.
So next, when we turn to the consolidated statement of cash flows, we see that the annual surplus is again 31 million. We see adjustments for items which do not affect cash. So again, one of the items being because when we look at that annual surplus, it does not include the property held in trust, that amount. So we do see the large adjustment for the 27 million of cash relating to the Culbertson tract claim. And then when we look at sort of purchase of tangible capital assets, 30 million. Your purchase of marketable securities compared to proceeds on sale, which contributes again, you'll see 15 million was used to purchase compared to just 7 million was proceeds. So again, this is investing in your marketable securities. So when we look at the majority of those changes, we end up getting the change in increase of 35 million in cash, which does relate to the increase to 88 million compared to 53 million in the previous year. When we look at the notes to the financial statements, so again, I will not go through all of these notes, but I'll just highlight on some key notes here. So note 6, which is on page 17 at the top, we see that again, the cash is comprised of the various funds within your externally restricted CMHC housing reserves, internally restricted, which does include the Culbertson tract settlement. So these are amounts that are restricted. And then your unrestricted funds, including 52 million in your operating fund, just over 4.5 in your housing fund, and then the other major item being 1.2 million in the OFNLP fund.
Yeah, I thought we had more money in the community development fund.
Yes, Chief, because we had a GIC which has been separate from here. There is a GIC being put and it got renewed this July in 2024.
Okay, so because there was, I
Yeah.
think, close to $3 million in there, and so you've
Yes.
taken money out to put into a
Yes.
GIC.
Yes, 2.5.
And is that in the name of the community development fund, that GIC?
Yes, it's a separate from the community fund, but it is kept not under the cash, it's separately kept as an
Okay.
investment.
Okay, and how much was in the GIC?
2.5 million,
2.5 million?
yes, from the community fund.
Okay.
Next, when we look
Okay,
at,
does the TCDF committee know that this is how it is? Because they all read these financial statements. I don't want them to come back and phone me, so I thought we had more money in there. They know? Okay, good, thank you. And so that's earning more money than just sitting in a bank account, right? Good.
so next, when we look at note 7, marketable securities, we do see that the cost as well as the market value of marketable securities, so again, equities, bonds, as well as GICs. And there is one change in the current year with respect to accounting policies, is that marketable securities, and this change has been basically pushed off by accounting standards boards for a number of years until this year, whereas now it's all accounted for within these financial statements at market value, which does really reflect what the actual value of the marketable securities are compared to previous years when it would have been reported at cost.
Okay. So it's the market value on the given day, March 31st.
Correct. Next, when we look at your accounts receivable, so ultimately, when we look at accounts receivable, basically, of the 25.5 million, essentially 22.5 of this amount is with respect to housing loans to band members. So the majority of this amount really relates to amounts basically owed by band members relating to housing loans.
Okay, John, a question with the next, I see we're on Turton Pen for those mortgages. Can we get a master list? Because we're probably going to need it from you for our discussion with the department on the claim, the loss of use claim and what we got sold those assets for. So they started to sell them in, the memorandum of understanding was signed on July the 1st, July the 3rd, 1991 by Chief Earl Hill. And then in 1992, they started to sell those houses. They rented them for a while. Some were rented and some were sold eventually when there was a committee formed. So do you have a list of Turton Pen mortgages in your audit papers?
There is a list of current mortgages.
But did you, because the reason why we have this Turton Pen bank account was we had to keep that separate, so that when we had the discussion of what the value of what we derived from the management of that property, we could inform the discussion. So is it all just been blended in under housing, or has it been kept separate the way we had instructed it to be?
Turton Pen is a separate statement within.
So then there
you
so there are a list of Turton Pen mortgages then in the audit.
correct.
Okay, so can we go back and get maybe a copy of all those statements and consolidate? So we need to be able to list what we sold the houses for and how much rent we collected each year from those houses.
Yeah, most of that would be a management item, but on a high level.
So we're probably
it's
going to need
within
an
these
auditor's
financial
letter to say the audit report says this much was, this houses were sold for this much, and the bank collected this much each year from the manager of that property.
Yeah, Chief, I have the master sheet for the Turton Pen detail of each of the mortgage.
Okay, can we, and what about the leases? Were they, because that would go in that bank account too, right?
Yes, I'll provide that to the next council.
And do we have a copy of all the bank statements that go that far back?
I can reach out to the bank to kind of get I should have.
Because they only keep it for 7 years.
Yeah, I could have more than 7 years, 10 years, but if they are required more than, of course, through the system of a bank, they can reach, we can find it to archive of theirs. Yeah.
Okay.
we can get that.
And Shelley, do we have all those bank statements that go that far back? Because I know it said don't destroy any financial records. Like the Turton Pen bank account statements. I'm sorry? So where are they kept here? They weren't at the airport though in the fire. Okay, good. So we're probably going to have to, Cecil, get all those records and make a compiled listing and a report on what we sold the houses for and what we collected in rents, going back to after the signing of the memorandum of understanding in 1991. But there was 2 years they hadn't bought anything, and when I was re-elected to council in 1992, we started implementing a practice where the public works and government services would have, Vic Leonard was the guy, would have to come to council and give the council a report on what they had bought and where negotiations were with each of those properties. That's how the council implemented that procedure. We kept their feet to the fire and it got done. Otherwise, we would just be still wondering and waiting.
All right, so moving on, so page 19, due from Loyalist Solar LP. So again, this outlines the terms relating to the Loyalist Solar LP and the participation payments. Note 11 outlines the investment in Loyalist Solar LP. So again, when we see the highlight amounts, basically the amount received in cash and how much was applied to the outstanding loan.
So, John, do you give an opinion whether this is a good investment or not a good investment?
I honestly can't say if it's a good or bad investment, but I can say that as previous discussions, the council has basically, you may see a loan in large interest amounts because that loan was taken so that to mitigate the risk of the band as well as not to put any of the band's cash at risk, even though the interest might be high.
So it cost us a little more money, but the band had no risk and no investment.
Yes,
to-
that's
to
my
gen-
understanding.
To generate a revenue stream.
Correct.
So we didn't put any money in, we have no risk, but we have a revenue stream.
So note 11, continued on page 20, is a condensed from this government business enterprise. So again, and this is reported because their year end is December 31st. So it is a little bit different from the March 31st year end, but you do see the share of earnings and partnership distributions, as well as the income from the and assets relating to the Loyalist Solar LP. When we look at note 12 on
So the loans are being paid down, so the balance of we owe is reducing with that loan, right?
that is actually not the case, Chief, as the partnership distributions do not match the amount of the interest. So
So the debt is not being reduced?
correct,
Is it being increased?
correct.
By how much?
In the past year, it was increased by the solar loan increased by approximately 500,000, and the wind loan increased by approximately 300,000.
So what is the plan going forward? Are these loans just going to increase, and why did it increase?
It increased from because the partnership distributions that didn't come to the band in cash as per the agreements were not enough to cover off the interest income. And when you ask me for the plan, that's not really my position as an auditor.
Well, I guess I think we need to have a meeting because I want to see these debts paid down by the
Yeah,
company.
Chief, but the interest.
Because they were supposed to pay down the debt, then any surplus would come to the band. And if they're not paying down the debt, I want to know why.
Yes, the payment is applied towards that loan, but the interest which is charged is high. So if you are, say, giving an example, if 50,000 is the interest total, but the participation payment coming is only 40,000, so still there is not enough payment
Okay,
applied towards that.
That's the case with solar, but that's not the case with wind. Because my understanding that the loan for the wind is with the Bank of Nova Scotia.
Yeah, but that participation payment, 50,000 is not applied towards that loan.
But that's the wind.
Yeah, the wind. we
The
get-
solar is different. Blue Earth is different.
Yeah, that's what I was trying to say, that the interest rate is high, Chief, and the application of the payment is not enough. But we can get more details, I can provide more details.
Okay, so then is it wise to keep taking revenue distribution and just getting deeper in debt with that company? Is that what's going to continue happening?
We'll have to talk to our consultant. Yes, the bank we would have to talk to.
Because I thought we had negotiated a better deal, and that certainly doesn't sound better to me.
Yeah, we can have,
I think we need to have a meeting with Derek and with the company, the CAO and their financial officer, to make sure we have a better understanding of this.
Yeah, I can arrange one and get more details into that, yeah.
Because David and Derek handled all those discussions with those companies. And Jean Leonard, right? Were you part of that, Angela? Were you, Shelley? Okay. Okay, carry on.
So page 21, note 12, outlines the investment in the Ernestown Wind Park LP. So again, these are presented, they are slightly off from the Mohawk's year end as it is presented from their financial statements. But this outlines the cash and liabilities of the organization, as well as both the revenue and expenditures for the year.
So on these two, the solar and wind company, do they give you a report at the end of the year from the lender how much is owed on that loan?
We get a separate statement from them, so.
From their accountant?
Correct.
What about the bank?
We get nothing from the bank. That loan may have changed since these statements, but these are typically the one, as you said,
But
with
if
Blue Earth.
if our name is on partly responsible for that bank loan, should we not get a statement from the bank?
We get the audited financial statement from Wind Park and the LS Solar every year as per their financial.
But normally if you owe money to the bank and your name is on it and you're partly liable for it, then normally you would get a statement from the bank to
Yeah,
see
we
how
do
much you
not
owe.
get the bank statement, but we get the financials from those companies, which I forward.
So we're relying on the the trustworthiness of the companies.
But in some of those, like the loan's not necessarily with the bank, chief. For example, the ones with Blue Earth. So we get a statement from not the bank, but from Blue Earth.
Yeah, they've lent us their money.
Correct.
And the same thing happened with the wind power, but Blue Earth was with the bank at one point in time, the Bank of Nova Scotia.
Yeah, but they may have their own, the actual company may have a separate loan for their financing compared to the loan for your equity portion. Chief. So next, note 13, so this outlines the investment in Belleville Affordable Housing LP. So again, no operations have really occurred. So basically the building of the property, as well as it has certain loans from MBQ, as well as external loans payable, so.
Okay, now Cecil, my understanding is that when they give the reports to CMHC then cuts them a check and then they pay back this loan, right?
Yes.
So have they paid back all of that money?
So we have, as of March, as we're talking this about March 2023, we had 970,000 due at that time. But in the current year, we have got 350,000 twice payment, which is 700,000 been covered in this.
So I guess eventually this will be zero then, right?
Yes.
And all we were required to invest, each community was required to invest $250,000. Is that correct?
That's what the agreement is, yes.
That's
Four
our
nations, yeah.
total investment.
Yes,
Then they had that revolving that line of credit at the Bank of Montreal, and then they pay back as they get reimbursed by CMHC.
yes. And they also got 2 grants from the TD, which is 350,000. That also they send it to Bohak, which got applied towards that line of
Okay.
credit.
So any idea when that loan will be paid off at the bank?
Like as of now, there is a balance there because they had other bills which were kind of applied towards the loan, LOC.
Okay, then after that's done, that line of credit gets canceled, right?
Yeah, that's specific for the Belleville Affordable project only.
Okay, and any idea when they're going to wrap all that up? Because they're starting to rent out apartments now.
Yeah, like I've not heard anything from someone in company like when they're for the application on the CMXC application and the money, but that's the goal that once they receive the funds, that will be provided.
Okay,
to us.
can you just write to them and ask them for a status report so the council knows? Okay, thank you.
So next, page 20.
But I would say that's a very good investment because we've got a building worth millions of dollars for an investment of 250,000. That's all been, new.
So next, turning to page 24 at the top, note 16, deferred revenue. So this outlines the various funding received as well as revenue recognized. So when we look at the ending deferred revenue, we see that it is approximately 49 million on page 25, of which major amounts relate to Health Canada funding of 7.3 million, of basically the certain program funds of basically 16 million, as well as road and bridges funding of 6 million. There are other major amounts, but basically those are the biggest components of your deferred revenue. Turning to page 6. So this outlines the various loans payable. So all of these have been continued to be paid down in accordance with agreements. Ultimately getting to a change of 7.9 million compared to 9.1 million in the previous year. And when we see principal repayments on the loans for the next 5 years are as follows. When you see the 3,672,000 for 2024, again, that is based on the current agreement in place. A lot of these loans are again renewed for another 5-year term. So that is typically not what you'd actually see expended in 2024 as the loan is renewed. But when it does come due, but if those loans weren't renewed, then that is actually what you would expend in 2024 under the current principal repayment terms. So
Okay. I don't see the nursing home account in here anywhere. Where is that? Because we raised close to $1 million for that.
I didn't get that, Chief.
For the long term? Yeah, for the nursing home account, there was $400,000 from the parent foundation, plus there was other corporate donations where that goes in that nursing home bank
But that
account.
would be in your operating as a cash that we raised.
So that's included in the cash.
That cash. This is, we are talking about the loans of CMHC and.
I know, but
Yeah.
but when I was reading them through, I didn't see that.
Yeah, no, we would not put it in the financial as a separate, it's a lump sum of all the cash.
You just have it all,
Yeah.
even though that cash is for specified purpose.
Yes, no, in system, it's a separate account, in the bank, it's separate account, but in the financial, there are 23 bank account, like I don't show it separately. We club them all into one.
And so is there a breakdown then, I guess, of what that cash consists of? Because really, how much cash is real cash for operations and how much cash is for other specified purposes?
Yeah, like in our notes, we have, like in my working, I do have that, but the financial, they're already 200 and some pages. If I put more detail,
Okay.
then that is like,
All right,
yeah.
so it's just all in cash.
So next, turning to page 28 at the top, we see again loans payable under the operations funds.
What page are you on, John?
Page 28 at the top, Chief. So we see these loans really under the Mohawk Golf Course. So these really relate to the golf course. So again, 1.1 million and 1.3 million basic paid down again from the previous year. And then where we see the under the operations fund, Government of Canada, we see that the pen lease loss of use loans. So again, these were funds previously advanced, has not changed, but where we see the Culbertson loans gone is that part of the partial settlement is that these loans were extinguished as part of the partial settlement.
And so the same will happen with Church Penn when we go settle that, that'll happen. We're about 2 years behind in our reporting to the department on there.
So turning to page 29 at the top. So again, this outlines the principal repayments, again, under the current agreements, but as I previously mentioned, where you see the large payment amounts in 2026 and 2027, it will likely be that these loans will be renewed for another 5-year term, but under the existing agreements, we see that the large repayment amounts are at those times. Note 19, again, as previously discussed, relates to the loan payable for YAOT LS Solar. So again, that's 13.8 million compared to 13.3 in the previous year. We see the interest expense relating.
So that went up, that loan increased by 500,000
Correct.
when it was renegotiated.
No, that's just because the distributions compared to the interest expense exceeds after the non-cash distribution. So. Page 30 at the top, note 20. So again, this outlines the Ernest Town Holdings LP loan. So similar concept to the solar.
The debt increased by 300,000.
Correct. So turning to page 31 at the top, we see note 21, tangible capital assets. So we see that basically where you see disposals and transfers of 15.7 million under the assets under construction. That again, for anyone who might not be familiar with these statements, that is really for any assets that are under construction. As the projects are completed, that is moved to a different line item. So for example, you could have 15.5 of that being for the wastewater infrastructure project. And as that it has been completed, it gets moved up to that line item. And then we see the assets under construction. We see the 27 million. So that relates to projects in process that have begun or have continued on in the current year. And ultimately, you do have basically 55 million of projects under construction, which are not subject to amortization.
So that would be part of the York Road paving, the bridge work. It would be these unopened road launches that have to be contracts designed and built. That's all that money, right?
Unless the projects are completed and all the phases are done, then they kind of get transferred to the special categories. Yeah.
So when we look at the,
Because there was work done during that fiscal year, like I know water and wastewater for sure, but yet it's gone up considerably. So we paid our bills though, did we?
Yes, this is tangible asset additions, that whatever project has been completed and then we are transferring it from the asset under construction to that specific category. Yeah.
so when we turn to page 32 at the top, we see the net book value of the various components, the largest being buildings and building improvements of just under 29 million. We see water, wastewater infrastructure of just over 46 million and roads infrastructure of 7 million, as well as assets under construction of 55 million. So the next item is page 35 at the top that I will highlight, which is note 27, accumulated surplus. So this outlines where your accumulated surplus, it's held. Again, these are where you have it earmarked internally through your different funds. So when you see, again, as mentioned early on in the audit, of the 186 million surplus, 139,000 of that is in the capital asset fund. 23 million of that is in the housing fund. 20 million is equity within the OFNLP fund. And then you do see the deficits in the wind and solar. The next item I will highlight, as it is new, if you turn to page 39 at the top, note 32. So again, when we see funds held in trust, Culbertson Tract settlement, so we see the settlement funds received as well as property held in trust, less expenditures during the year, ultimately result in a balance at year end of just under 33 million. And we note that the property held in trust relates to just under 300 acres of land, as well as about 1.2 million for additional purchase and remediation costs. Turning to page 40, related party transactions. So this outlines key compensation to management, as well as honoraria to chief and councilors. And then amounts owing to key management personnel is noted down below. However, again, when you see this, when you say how are amounts owing from them, is that these are just regular payment terms for band members, often included sort of within your mortgages receivable, as that is available to as band members, just like any other band members. And that really concludes my presentation. For anyone looking at full copies of the financial statements that I believe will be made available, is the other statements really are breakdowns of your individual funds that are all within these consolidated financial statements, as well as individual programs.
So John, CMHC used to have their own audit, and the Open LP used to have their own audit. Is that no longer the case?
Those audits are still required, and those were completed previously, Chief.
So they have been done then, right?
Yes, for the March 31st, 2023 year end, the OFNLP audit was completed. Those were completed almost over a year ago.
So I do recall seeing the schedule where we spent our money to the Open LP, but I never saw the full audit report for CMHC or the Open LP. I never saw the actual report, just the schedule.
Though that would have been over a year ago, and I think with everything that goes on over a year, you would probably.
So we have a copy of the audit. I believe
Yes,
everything's
we
good.
have
I
all
trust your
the copies,
judgment. But
and we have
Yes.
also send it from, to the funders as well, to OFNLP as well as CMHC as well.
the funder has to get it, but so does the council, because they are the ones who signed for that, all that money.
Yep.
Yeah,
So
Yeah,
the
so
council
for-
does need to see the audit
It's been a year, that's why.
and be given a copy of those audits. It's not just the funder, it's the council and the funder. So I would say, John, our community is in a healthy financial position.
Yes, when you really look at sort of your cash, what's been put into basically the territory in terms of your wastewater projects over the past couple of years, your other building infrastructure,
So
it's fairly strong. Again, as highlighted, and there's a couple concerns that you brought up, is that when we look at sort of a couple of those external investments, while we do see that those are contributing funds to the band, as in conjunction with the agreements, is that you do want to make sure you continue your due diligence, as you do see that those are loans by separate legal entities, but they are accruing interest, and those loans are increasing.
I don't mind debt as long as the debt is, the loans are being paid and the debt is reducing while generating an industry. That's good. But if I see the debt growing, well, we're just taking a lot more money out and we're getting deeper in debt for the money we're taking out. To me, that's not a good thing.
Correct.
So we need to get a better handle on that. Because the way it was supposed to operate, they were supposed to pay down the debt first, and then if there was money left over, then we would get that money. It was to reduce the debt first. Of course, it's like that. You have to borrow money to make money, but you want to see the debt being reduced. And I think the solar and wind are good investments, because Ontario is projecting that they have to double the electrical supply by 2050, and the investments are not going to keep up. So I think they'll always buy some wind and some solar in their energy mix, even when that contract ends in I think it's a 25-year contract, if I recall correctly, and that the ISO will probably have to renew those contracts to contribute to the power grid. Aaron?
Oh, no, I was just going to say thank you for the audit presentation. Appreciate it. It was nice and clear and concise.
Is there any questions from any community members online through the chat for either myself or? Okay,
Did we have anybody online? 10? Okay, I'd like to thank the 10 people, 10 members who joined us via online. Thank you very much for joining and showing an interest in your community's financial affairs. And I'd like to thank the staff. We've been short-staffed many times this year, and this COVID issues put us a little bit behind and late reporting, like many other First Nations in Ontario. But hopefully, we'll get on track. And where are we at with the 2024 audit? When do we hope to have that finished?
Yeah, so Chief, tomorrow in the council meeting, I'm presenting the OFNFB audit, so that's finalized. Once it's approved by the council, I will share all the information to the auditor, and then it will be the CMHC separate audit, which will be my priority, and then the main consolidated audit. Like piece-wise, there are a lot of schedules to be made, but I'm focusing to.
Yeah,
go
I'm just
with
looking at it, maybe an end date when we'll have everything finalized and we can look to get it all wrapped up.
Fully, because of course it doesn't only depend on myself, but the turnaround time when I give to the auditors, but within I could say October end.
October, okay. So we'll look forward to having that all wrapped up in October. Now, are you having any problems, Cecil, because we have this consolidated audit on these companies, so we have investors. Have they given you their audit reports by the end of March 31st, 2024? So if they
So
haven't, well, let's send them a letter and tell them that we need it, and if I need to sign it, bring it to me and I'll sign it.
Yeah, so their financial fiscal year is different, but we do get their main audit as well as the other interim audit they do,
Yeah.
and I'll reach out to them this week to get their financial.
So that will be Belleville Affordable Housing, solar, wind, solar,
UAT as well as
ELT,
ETV.
and as well as the golf course.
And the golf course.
And so, John, you're the auditors for the golf course,
correct.
and so where are they at with their audit for 2024?
So we basically, for 2024, typically, like, we've just wrapped up 2023. Everything that needed to be done for the consolidated was all done, but it's with me for review. And then I think 2024, because as they've changed sort of accountants, the current existing management and accountant, it's all pretty clean and easy to go through. So I don't
So
see any concerns.
have they given you a
with the
date when they're
golf
going to give you everything you need so you can do the audit?
course. Correct.
No, they should be giving you the draft audit statement, and you just audit that report.
In an ideal world,
Or do you have to do
yes.
the audit report as well for them?
No. Like, we do build up some of the stuff, but ultimately most of the stuff comes to us pretty clean for that. So
Okay, great. So I'd like to see that, some deadlines for reporting to the board, when the board can expect to see these things done based on management's discussion with the auditors, and the same thing with ours, so the council's kept up to date.
yeah. Are we still online, Shelley? Okay.
Okay, that's great. So we'll look forward to getting everything wrapped up and getting back on track and back to our July deadline criteria, and then that's the goal for next year,
For 25.
for
On time.
2025.
Let me know once you've signed out, Shelley.
Okay, and thank you very much for joining, everybody. Thank you.